The S&P is back in no man's land, and we have the biggest week of the year coming up. What's up, guys? It's Brandon from Amphibian Trading, and next week the market is set up in a do-or-die situation. We've got the CPI report on Tuesday, the Fed announcement on Wednesday, and Friday is quad witching. So Tuesday we get the CPI report, and if you remember last month, that came in lower than the forecasts and it ignited a massive rally. It's going to be closely watched again to see if what the Fed is doing, raising interest rates, is working to lower inflation. And then speaking of the Fed, on Wednesday we have the FOMC announcement. It's widely expected that there will be a 50 basis point hike. However, nothing's guaranteed, and I think what's going to matter more than the actual interest rate decision is not only what Jerome Powell says in his press conference, but how he says it. Is he coming off as hawkish or is he coming off as dovish? So let's start now taking a look at the S&P. Last week, we finally pushed above the 200-day moving average, and we saw a very nice change in character. On Friday, the market had every reason to sell off, but it didn't. It had a pretty positive close. Well, this week, that changed. We closed lower by over 3%, and now we're right back in the no man's land between that 50% and the 61.8% Fibonacci retracement. We're also back below our 21 exponential moving average as well. One area I'm going to be watching very closely is right around that 3860 to 3870 level. It's about 1.7% lower than today's closing price, so there's no guarantee we trade down there. However, there is a lot of confluence at that area, so it wouldn't surprise me if we did. First off, it's right around the low of November 10th, which is when we had the last CPI report and the market rallied over 5%. Next, if we run the Fibonacci retracements from the low to the high of the current rally attempt on December 1st, you get the 38.2 retracement right there at 3867. On top of that, we also have anchored VWAP from the October 13th low that sits right at 3866. And to top it off, we also have the rising 50-day moving average right below that, and it should catch up to those levels by the end of the week. So if we do end up pulling back more, that's an area I'm going to be watching very closely to see if buyers step in and show support. Moving on to the NASDAQ, which has been the weaker of the two indexes, we also see some negative action. We're back below the 21 exponential moving average, and we also made a new lower low. On the bright side, the NASDAQ did find support at the 50-day moving average, but it still has a lot of work to do. Alright, so we already talked about how next week is going to be pivotal for the market. So now, which stocks could offer up some good opportunities that we can take advantage of? First up is Celsius, CELH. This one broke out from a cup base last week and now has a high handle as it came down this week on lighter volume. Overall, the volume pattern has been good. You can see light volume as the base has been forming, and then volume picked up as we came up the right-hand side of this cup. We also have the relative strength line right near the highs, and it's trending upward as well. So if this can push above this week's high with heavy volume next week, I think it's buyable. However, breakouts have not been doing well in this market, so my preferred entry would be a pullback to the 21 exponential moving average. Next up is going to be ON Semiconductor, ON. The semiconductors in general have been holding up very well lately, and this one has a cup with handle base. It found nice support at the 10-week moving average this week, and if we look at the handle area, we can see we've had tight closes and volume continues to be well below average. If the market reacts positively this week to the CPI or the Fed, I could see this one breaking out. Moving on, we have Impinj, ticker symbol PI. This one broke out from a double bottom base a few weeks ago and has generally acted very well. After pulling back these last 2 weeks, the 10-week moving average, which is this red line, is quickly catching up to price, and it could offer a nice low-risk entry. Okay, Insulet Corporation, PODD. So this formed a very nice 11% deep flat base. It broke out of a flawed cup base on its earnings report a few weeks ago, and has now corrected that by building a proper flat base. So if you look at that cup base, the flaw is that there was a lack of symmetry and it came straight up the right-hand side. But like I said, this is corrected that now by forming a very nice proper flat base with tight closes and low volume. If this takes out the left side high of $320 with some good volume, I would consider this actionable. Next, let's talk about SANM. This one broke out of a cut base and went up 7 weeks in a row, gaining 33%. From there, it went tight for a few weeks and then sold off this week with the market. I don't really like that the volume was heavy this week as it came down, but I will be watching this one for that first test of the 10-week moving average for a nice low risk entry. All right, the last one for today is going to be Super Microcomputer, SMCI. Similar to SANM, this one broke out of a cut base and it also went up 7 weeks in a row. Now it's pulling back and it looks like this is probably going to have a date with that 10-week moving average as well, where I'll be looking to initiate a position. So there's 5 ideas to watch next week. We've got setups for pullbacks and for breakouts, so let's see how the market reacts to the CPI and the Fed. Thank you for watching, and if you enjoyed this video, please go ahead and hit that like and subscribe button to stay up to date with all my latest videos.